Welcome to Tao Salon. In this explainer, we're going to unpack the 2025 Youth Consumer Survey Report. Now, this is put together by DT Business Observation, a media outlet under Yikai. They conducted the survey in late 2025 and just published their findings in February 2026, so it's a really fresh look at what's happening. All right, let's kick things off with the one sentence that really sums up the entire report. This isn't a story about people spending less. Oh no. It's a story about where that money is going now, and it's a massive shift driven by a completely new set of values. So to really get our heads around this, we're going to break it down into 5 parts. We'll start with the big picture, then we'll look at what people are actually buying, figure out why they're buying it, see who they trust for advice, and then wrap it all up with the 3 biggest takeaways you need to know. Okay, let's dive into our first section. The report is crystal clear on this. That whole revenge spending thing we saw after the pandemic, it's over. Done. What's replaced it is something a lot more careful, a lot more stable. And you can see it right here. That big green bar in the middle is the key. For the first time in the 3 years they've done this survey, the largest group of people said their spending was mostly unchanged. It's a huge signal that we're moving away from those crazy financial swings and into a period of, well, stability. But here's where it gets really interesting. If you slice that data by age, a totally different story pops out. Look at the post-95s generation. Their spending shows a net increase of almost 25%. At the same time, the post-80s crowd is the only group whose spending actually went down. It means the younger generation is, without a doubt, the real engine of the consumer market right now. So our next question is obvious. Where is all that money going? And you're about to see the answers tell us a lot about what it's like to be a young person in 2025. First up, and this probably won't shock you, people are still dying to get out and do things. Real-world experiences are a huge priority. Almost 40% of young people are spending more on travel and getting outdoors, and it's leading the pack by a pretty wide margin. But it's not all fun and games. There's this really practical side to things too, a trend the report actually calls survivalism. It basically means people are doubling down on the essentials: good food, good clothes, and, you ready for this? A huge jump in spending on health and nutrition products. They've basically become a new essential for everyone. And this focus on practicality even bleeds into the digital world. The report found a really fascinating split in how young people are starting to pay for AI. Just look at this. In the big Tier 1 cities, what you'd call e-sen, people are paying for AI to be a digital beast of burden. They're using it to process text, get more efficient at the office, to get ahead. But then you go to the lower tier cities, the Sisian and Wuxian, and they're more likely to pay for AI as a friend, for conversation and emotional support. It's a pretty wild digital divide. Okay, so this brings us to the really big question, right? What is the core motivation behind all of these choices? What's the why? Well, it's probably not what you're thinking. It all boils down to one word: certainty. People are just done chasing hype. They're paying for things they can count on. You can see it on this slide. When they were asked what they'd pay more for, the top answers were quality, health, and actual necessity. Get this, quality and health are now more important reasons to spend than just, I need this right now. So, okay, if it's not about keeping up with trends, what's the end game? What's the point of this intense focus on quality and health? And here's the answer. This slide really nails the new mindset. The ultimate goal is self-investment. Spending money on your health or on improving yourself, things with real long-term value, is now a higher priority than just spending on fun or luxury. It's about investing in a better version of yourself. So when you think about it with this very careful, investment-focused mindset, it makes total sense that who people trust for advice has also been completely turned on its head. I mean, the data here could not be more clear. The #1 most trusted source of information, by a mile, is a recommendation from a friend. Over half of people are relying on folks they actually know. It's all about real-world experience, not some slick marketing campaign. And hidden inside that data is this little bombshell. AI recommendations are now seen as more trustworthy than celebrity endorsements. Think about that for a second. The big takeaway here is that authenticity is everything, and the old ways of creating influence are just fading away. All right, so after all of that, what does this actually mean? Let's boil this whole report down to the 3 most important things you need to walk away with. First up, we're seeing the rise of the pragmatic spender. That whole era of impulsive, trend-chasing buying is on its way out. Today's consumer is basically an investor, carefully thinking about the long-term return on every single thing they buy. Number 2, self-investment is now dominant. The whole point of buying something has shifted. It's less about showing off what you have and more about improving yourself from the inside out. It's about being better, not just having better things. And finally, trust has shifted to authenticity. The circle of influence is smaller and way more personal now. Brands can't just throw money at a big ad campaign to buy trust anymore. It has to be earned, one genuine peer-to-peer recommendation at a time. Which leaves us with a really powerful question for the future, right? In a world where every dollar you spend is a vote for a better you, how are companies going to adapt? Because as this report makes clear, the flow of money has changed for one simple reason. What we value has changed right along with it. Flo Tao Salon, wishing you prosperity in the year of the horse.